Good evening. This is the Elliott wave update for the S&P 500 for Monday, January the 17th, 2022. Not much to be adding to what I presented yesterday in the update, which I updated the larger picture and then also back down to the smaller picture. The S&P did start off in the direction that I was expecting, but it stopped and now is kind of gotten range bound during the Globex session that began Sunday and then Monday. And again, as we open up Globex again this afternoon or this evening, we're still stuck in that same range. And as you can see on the hourly chart, it basically, as in the NASDAQ, is sitting between the 50 moving average, the hourly 50 moving average, and the 20 moving average. So it's just likely going to stay range bound until we can get some input from another market that wants to trade it higher or lower. So here's what we need to consider and take into consideration for what could happen overnight. So again, just to update, I did switch this back over. Now again, before it was minor wave one, but because the market broke down on Friday below 4,627, substantially below it actually, it did kind of change the view that left this as three waves. And so instead of it being a 1, 2, and a 1, and then this would have been a 2, and then we would have jammed higher, it didn't. It broke, and now it's created 5 waves down. So this is a 3 waves up, and right now, but what we do need to consider is that this changed from being corrective to not being corrective. So it's a minor wave down, and then instead of a instead of a wave 2, a minor wave 2. So now it's minor wave 1, but of a larger wave down. And this is wave 2. So we're into a third wave. And that third wave kicked off by putting in the first. So this is 1 of 3, and we might still be in 2 of 3. I had originally had estimated that it could be over right there at the opening high of yesterday's Globex, start of Globex, at 4671.75. So, but that could be A of 2, B of 2, and now we're in a C wave. Again, sitting here doing nothing does not add any clarity to the potential of what could happen overnight and into tomorrow morning. But we need to allow for the possibility that we might break above that 50, which is at 4660 right now, then break again above 4666, head up towards 4683 to 4686. Now, at 4686 is where the hourly 200 sits. And that may continue and get up there, and that still would be just part of a minute wave 2 and truly set the stage for a very accelerated drop as we get into a third wave down. Again, just repeating myself as I often do, third waves under Elliott are most often, the longest and the strongest wave within a 5-wave sequence. Now we are looking for that 5-wave sequence down, and that's to kick off the larger corrective phase that is in progress. So what I have done is I've added the extensions for third wave. Now, third wave, all we have so far is that we can compare it to this first wave. Where it would be equal in length would be 4503. We have kind of a more serious confirmation that upside is off the table for right now, would be a break below 4520. Once that occurs, then there's more support and more confidence in those highs at 4808, 4809, completed all of those advancing sequences. And so added to this would be, this is intermediate 5, would be a primary 5, a cycle 5, and a super cycle wave 3. So we if that does hold and that does stand, we are in the beginning stages of a much larger, much longer term corrective phase. It's going to be great. It's going to have a lot of trading opportunities in it, both to the upside and to the downside. There'll be plenty to do. It just is now going to unfold over a much longer period of time. Now, what can we expect here on our hourly picture? We just now covered the upside, but if the market begins to turn lower, I definitely, as a minimum, would be looking for 4503. But being that the third wave is often the longest and the strongest, I would be expecting it to come down to 4357, 1.618 of that first wave. So one other thing that I can do, once we get a top in and the process begins, I can run another extension to cover this third wave. So we got the minute third wave, and then we have the larger minor third wave. So we can get two levels of where this all could end and where that third wave should come in. And it likely is going to show up down in here somewhere. And then we get a rally, and then we get another drop back down below here. So for tomorrow, we'll see what actually happens. The market's kind of sitting pretty still, not really doing much. It opened lower, they're rallying it back. So very kind of ebb and flow, nothing really going on. But I do expect that once we all get back online tomorrow morning and everybody's in full gear, that we will have some clarity as to the move. And I think that the move will continue to the downside. Right now, for whatever the reason is. Again, let's remember earnings. That still is going to be the main focus. And there's going to be a lot of hype and a lot of pushing markets around. We did get disappointing numbers from the financial sector, but I think they continue to come out. That could put some controls around the S&P. And then also moving into that week, we begin to get Apple, we begin to Advanced Micro, AMAT, Amazon, Facebook, Google, Microsoft, Netflix, NVIDIA, all of them. We're now looking towards all of them. And quite frequently, or quite seriously right now, the larger titans within the tech sector really don't come out until next week. So starting like the 25th, the 26th, all the way up to the 1st of February, which pushes us into the week after. So we still have some time. There's going to be a lot of speculation, there's going to be a lot of trade, and a lot of, I think, movement as people focus on that and traders focus on that. But right now, I am looking for the continuation to the downside. And so I'm going to leave it there. We have all of our support levels. There they are. 4621, 4593, 4572, 4553, et cetera, all the way down. Those remain in place. We have our resistance coming up. Right now, we're stuck between the 20 and the 50. So I'm going to leave it there. Continue to trade smart. Use the moving averages. I know I preach this all the time, but it stands true. Use the moving averages for entry and exits. Use the Elliott, use the Fibonacci support and resistance. And our next update will be on Tuesday, the 18th.